What is up guys, my name is Ignas, welcome back to the channel. A few months back we've looked into Lockheed Martin, but with its price surging in the month of March, there hasn't been much opportunity there, at least with its dividend yield. So now I would like to take a look into another aerospace and defense name, Raytheon Technologies, ticker symbol RTX. It is one of the largest defense manufacturers in the world by revenue and market cap, which currently stands at just over $137 billion. So on the year to date, the stock is now higher for 6.3%, pretty much the same in 1 year plus 6.79%, and in 5 years the stock went higher for 21.69%, going from $75.90 in 2017 to $92.58 in 2020. So the growth in price isn't something to be proud of here, but our focus today is the dividend. Raytheon is paying an annual dividend which now comes in at a yield of 2.38%, but how this yield stands to its 5-year history. To check on that, we will go into my dividend investing watch list on Google Sheets. So we are now in the watch list and this is the tab for Raytheon. And here we have information for the dividend yield for each quarter in the last 5 years. Out of that, we can calculate that on average in 5 years the dividend yield was at 2.35%. And on this graph on the right, we can find exactly when the dividend was under the 5-year average, and then if there were times where the stock was trading with a yield higher than that same 5-year average. So back in 2017 with a yield of 2.19%, it was under average for 6.77%, then the yield went a bit lower in 2018 at 2.11%, 10.18% under average. In 2019 it got really close to the average, 2.09% under, but after this close-up it started going way worse. By the end of 2019 we saw a dividend yield of 1.49%, so 36.57% under average. And then the worst part was in 2020, where the yield bottomed at 1.44%, which is 38.70% under the 5-year average. But after that we did have the pandemic sell-off, so with the price dropping in 2020 the yield topped at 3.81%, which is 62.19% over average. Unfortunately, this dip was bought up, so in 2021 we saw the yield at 2.59%, which is 10.26% over average, and then in a year in 2022, we had it at 2.15%, which is under average for 8.47%. Even though there is not much to be excited about, there is still some opportunity to be had right now. Currently RTX is trading at a dividend yield of 2.39%. Given that the 5-year average is at 2.45%, we now have it higher for 1.74%. So it seems that in 5 years, for the majority of the time, the stock was trading under the 5-year average, and we pretty much only had the opportunity to get in with this dip in 2020. But again, the stock was trading under the average for the majority of that time. So even though it's 1.74% over average, it's still a better opportunity than we had in 2017, 2018, 2019, and 2021 apart from the beginning of that year. Now if you would be interested in doing a similar analysis yourself, you are able to do that by following the first link at the top of the description. Otherwise, feel free to add the ticker in the comment below, and I'll consider adding that into the watchlist myself. Now looking into dividends, I want to take 2 more steps. So we'll check how the dividend payout amount changed over time, and also into Raytheon's dividend payout ratio. So first is the payout, and here we have the history of the last 5 years. Back in 2017, they were paying $2.45 per share on the trailing 12 months. Then in a year in 2018, that increased to $2.55. And in 2019, $2.72. Then in 2020, we had the payout at $1.86, but that was the price bottoming at around $50 per share. So we had the yield surging to 3.61%. And then in 2021, we saw the payout at $1.90. And then lastly, in 2022, the payout increased to $2.02. So we did have the payout topping in 2019, and then it got readjusted in 2020. But as the price also dropped heavily, the yield was actually quite up there. And with the payout still increasing this and last year, the yield keeps on going lower only because the price is still going up. But nevertheless, they are able to keep on increasing on the payout. Now the next part I want to take a look into is the payout ratio. It shows what part of company's earnings are being paid out as dividends. So Ratio's forward payout ratio is now at 38.01%, meaning that just a bit more than 1/3 of their earnings are being paid back to shareholders. So this suggests that they do have cash available if they do want to keep on increasing on that dividend. So that was it. Make sure to support the channel and leave a thumbs up under the video. Are you holding Raytheon Technologies in your portfolio right now? Share your stance on the name and your position in it in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share all my documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on a different company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.